Last week had to be one of the craziest endings of a week I've ever seen in the market, and I've been doing this since 2007. The question is now, what the hell do we do next? And hopefully I have some answers or at least some ideas for you in today's episode of The Trading Edge. If you guys are brand new, my name is Akil Stokes. This is a weekend video that I do every weekend. Yeah, that makes sense. Sharing with you the top trading ideas that are on my radar for the week ahead. And of course, giving you some trading lessons that hopefully push you in a positive direction in your trading journey. Last week was crazy. We spoke about it a lot. We had Liberation Day. We had non-farm payroll. We had Fed Chair Powell speaking in the middle of that as well. And now we're left with a lot of madness on our chart, and we have to figure out what to do with it. Now, I want to re-emphasize this. I spoke about this in the range bar video that I put out for you guys yesterday, but understand, as traders, we need movement in order to trade. So movement is good, but understand that not all movement is good, and it's very easy to get sucked or suckered in to a lot of bad trading opportunities. Just because we see things moving, we hear from others on social media about the glorious times they're having, and we feel left out. It's important to stick to our plan and wait for the right opportunities. And as we look into markets this weekend, what we're seeing is a lot of crazy directional movement, right? If I go to just like any random pair here, I'm going to close my eyes and click it, right? Just boom, boom. You're probably seeing big green or red candlesticks. I hope I'm actually touching the thing. I'm a peek. Oh yeah, I am. Look at that. Big green or red candlesticks all over the place. And these are sometimes referred to as falling knives. Now, there is a saying in the trading industry, don't catch the falling knife, which is true, although I do have some strategies where I do it. They're very aggressive strategies, but in general, yeah, you don't necessarily want to catch the falling knife. So how do we handle these situations? Well, you wait for the falling knife to bounce off the ground and give us a clue that it has found the ground. I usually have good analogies, not today, but we want to wait for confirmation. I had a good podcast episode I recorded with the Trading Battle the other day where I told them my favorite saying, where it's like, as traders, we want to be predictive in our analysis, reactive in our execution. And what that means is that we want to predict certain price levels, but then we want to wait for the market to give us clues before actually involving ourselves in those price levels. And today I'm going to give you two examples of how to, I guess, conservatively catch the falling knife. Ding. So let's hop in. We're going to start here on pound dollar, right? So pound dollar is a good example. You can see that we had a big bullish day up. Then we got rejected. We had a big bearish day down, and now we're holding. And where are we holding at? We are holding right at the previous lows of this consolidative period, right? We call that structure. You can call it support. It doesn't matter as long as you know what it is. So if you are a counter trend trader, a structure-based trader, this is a good place to look for an entry. This is a good place to say, hey, the bears have had their turn. They've spiked it down or pushed it down all the way from $1.32 all the way down to $1.2875, and they're probably going to start taking a little bit of profits, right? So sellers are going to become buyers, and there's probably another flock of buyers that exist here as well because, well, this is where the price reversed before and went up. So ideal place for me to get involved. However, I've got this problem. I've got a falling knife, and everyone says, do not try and catch it. It will be bad for your hands and probably your account as well. So what do I do? And this is going to be one of the more aggressive versions of it. If you think of the most aggressive version of just like putting a limit order there and saying, okay, here we go, like playing a little Russian roulette, whatever like that. A more conservative way would be waiting for some type of multi-candlestick reversal. I like to call them the 3-bar reversals because they come in threes. Genius ways of naming things, right? But I like to look for a 3-bar reversal, and this is what a 3-bar reversal is. We start off with a high momentum candle. This red one right here, not only does the size tell us that there's a lot of momentum, but the close towards the very low of the candle tells us that it's a strong candle. If you haven't done so already, I hope I can link a video somewhere below, but check out the videos I've done where we break down kind of understanding a candlestick based on like the close, and if it's strong, weak, or neutral. It's gonna be very helpful when you analyzing the price charts. I'll try to throw a link below if I can find it, but YouTube search Akil how to read a price chart. That's probably the video if I can remember correctly. But we start off with a strong momentum candle, lots of momentum plunging into previous level of support, right? And then we get a little bit of a rejection candle, right? This next candle is going to be a rejection candle. I call this a pin bar doji. You may hear it referred to as many other things because as traders, we don't typically agree on terminology. But for me, it's a pin bar doji because a doji candle is a candle, a neutral candle, a candle that has a wick to the upside. That's the little skinny part here. It has a wick to the downside, and it typically closes someplace in the middle. Like imagine a game of tug of war where you have the flag thing in the middle and one team is pulling it and then the other team pulls it back. And then at the end of the game, it kind of just stays there in the middle. And it's a stalemate. That's pretty much what your doji candle is. I call this a pin bar doji because the size of the wick to the downside is much greater than the size of the wick to the upside, meaning that there was a bigger bearish push here and it did get rejected, right? You can see it came into this previous level of structure. Price tried to plow through it. The bull said, no, 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 no. Stop. No, right? And then they pushed it back up, right? If this thing were to close like this at the top, this would be what your traditional pin bar looks like. So that's a good sign of what I mentioned before. Not only is the selling pressure slowing up, and again, bears are looking to take profit. This is where I would take profit if I were involved in this trade, but also there are new buyers that are interested. So you see that flood of selling pressure kind of get reversed because it slows down. There's just less sellers in the market. Now, could you buy this? Yeah, sure. You can also buy anything you want in the market. That's the beauty of trading, right? But if you wanted more confirmation, and this was a good quote, I don't know if you want to call it. I told you I did that interview with the Trading Battle, which is going to be a really good one. I have no idea when it's coming out, but that's one of the best podcast interviews I've ever done. It was amazing. But he mentioned that one of the things that he always looks for in his trading is a positive candle confirmation. So what that means is that if he's looking to get bullish, he always needs to see a bullish candle form at his level before involving in the trade, and vice versa for bearish. And I never actually thought about it like that, but I kind of do the same thing with higher high, higher closes and stuff like this. So what I would look for is a candle that breaks above and closes above, right? You guys know our principles on breaking structure. Well, the same thing refers to, kind of candlesticks like this. If we can have a higher close on this next candle, meaning it breaks and closes above this pin bar doji thing, that is a positive sign of confirmation. This also completes the 3-bar reversal, and that would be a good way to get involved. So that's one way you can do it. That's a little bit more conservative. Next, I'm going to take you to an even more conservative way to kind of catch this falling knife or whatever you want to call it. By the way, this is a buying entry right here. This is an actual trade. If this happens, this would be good for a potential buy. I'm getting all into lesson mode. This is trading idea as well. Next, we're going to head over to the dollar yen, another fun pair. By the way, I didn't mention there's a lot of new stuff happening this week as well. We're not done, right? We have, I think, a New Zealand dollar rate change New Zealand rate change on Tuesday. We have FOMC minutes on Wednesday. We have Bank of England GDP on Thursday, I want to say. I should have checked this before. I'm just kind of remember. But we do have, check your calendar, and we do have more economic news coming up this week. So we're not done, especially with interest rate kind of talk that's been out there about how many times we're going to cut before the end of the year. So keep that on your radar as well. So here's another example. So the first one was the most aggressive would be catching the falling knife falling, hand out. Hope that you catch it and doesn't go through your hand. Risky business there. Second one would be waiting for some type of multi-candlestick reversal, like the 3-bar reversal I showed you. This one would be waiting for more of a really a rotation in trend, I guess you can say. And you're going to see this when we go down to the hourly, right? So this isn't quite the same falling knife. It's broken up a little bit on the hourly, but obviously we have a clear directional move, right? We're going down, right? Everyone can see that. And what happens here is you can see that after we kind of get to, after we get to the bottom of this move, we have a nice 3-bar reversal here, not the highest momentum candle, but same type of deal here. We start consolidating, right? We start going less up and down or down and up, and we just go sideways. This is consolidation. Then we do something a little bit funky, right? We do a breakout to the downside, which ultimately ends up as a false breakout. We don't continue that. We come right back up and break out to the upside. And this is going to be called a rotation, right? This little, the top of this consolidation zone is a structure shelf. This is a shelf of resistance. once we get a break and close, right, confirmation above that, what that does is it puts us in a rotation. A rotation doesn't mean a confirmed trend, so we can't be like, I confirm you as a trend, right? But we can say that, hey, this trend may be starting to form. And again, I do too many videos here, but I did one a little bit not too long ago about kind of Elliott waves, and I think it's called like the best part of the trend to take. I'll put it in the link below as well. But we spoke about, hey, looking for this as being the best move to catch when price is moving. This would be like the second extension wave in Elliott waves, or wave 1 to the third wave if you're counting every single one. But you're waiting for confirmation, right? You're waiting for confirmation in that this downward move is over. It's having a think, right? It consolidates. And then you wait for the violation of that consolidation in your favored direction to show you proof that, hey, this bullish move may be more likely to happen than not. And obviously you can trade on the breakout, something like that. But me personally, this is just my style. I like to wait for the retracement, get me a little cheaper price to come back into this consolidation level, and then look for buying reasons right here and a chance of me being able to trade them up. So that's another way that we can handle these falling knives in a more conservative approach. So those are two ways to trade falling knives. Let me know what you think. If you have any questions, leave them in the comment section below. Also, I put out a podcast this week called Game Changing Advice from 150 Traders. It's supposed to be a video episode, but I forgot to put the camera on, stupid Akil, but it has been catching fire. So many great comments from that, so make sure you give it a listen if you get the chance. I'll see you this week with more Trading Coach Podcast episodes, more shorts here on YouTube, and probably some more videos as well, because that's kind of what I do. And if you ever want to learn how to trade, make sure you check us out, www.tier1trading.com. Start with the 14-day risk-free trial membership. That way you can feel us out, feel out the community, feel out the content, feel out the courses before you make any type of decision, because we only want to work with serious traders. So make sure you're serious before you actually commit. www.tier1trading.com. Enjoy the rest of your weekend. And until next time, plan your trade, trade your plan. Take care.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.